Alright, what's happening, people? It's Chase. So, last couple days I've been on a little losing streak. Today I'm back. 4 wins, 0 losses. I told you guys, I posted a tweet yesterday. Typically when I'm on a losing streak, after 3 in a row, I reduce my size. I cut it to a fourth of my typical size. I had some people questioning this. They're saying, oh, well, if your strategies aren't currently working, why not just sit out? Well, if I just sat out of the market, then I wouldn't have gotten all these wins today. I gotta have skin in the game to know whether my system is working or not, right? So here's what we're going to do today. That's just a little preface. We'll talk more about how to change the losing mindset into a winning mindset later. A lot of it really just has to do with the technicals and whether strategies are working or not. But here's what we're going to do today. I'm going to show you guys 3 different entry techniques, okay? Everyone keeps asking me, Chase, I need to know how do I enter? What are the entry techniques? What are we looking for? Okay, I'm going to show you 3 different entry techniques over 4 trades, all right? And I'll make you guys a deal. You go and like and retweet this right now, and if it doesn't live up to your expectations, you can unsub, you can unfollow, whatever you want to do. I promise you that there's going to be good alpha in this video. Teaching you entry techniques and how to get into trades, and you're not going to see cherry picking. What you're going to see is consistent setups that have been working repeatedly. Okay, let's get right into it. We're going to use the ES for today because that's what I traded, but I am going to tell you which type of setups will also work for crypto, Bitcoin, Ethereum, etc. Okay, so we will cover that. I know a lot of people say, oh, another ES video. No, look, it's going to be entry techniques. You're going to want to see it. And I'm also going to relate it as to what you can look for on BTC and ETH. Okay, so this gray, right? If you could see this very light gray, this denotes the daily session. Okay, when the stock market is open. This is the overnight for the futures hours. Okay, so very simple. What we're doing here is we're zoomed in. When we're looking for intraday scalps, most of the time we want to work with intraday levels and what we have from the night before. Okay, so very quick right off the bat, when you look at the chart in the morning and let's say we're over here and the day is about to open. Okay, we're going to use the replay tool right here just to quickly mark this up just so we can see. I don't want you looking ahead and being like, oh yeah, well, it's obvious now. We want to look at previous data and say, okay, well, when the market was about to open, what are we looking for? First off, I want you to look at this chart and what do you see? There's something very obvious in here. There it is. Resistance, 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 resistance. And this consolidation right here is what sends us to the resistance, okay, and up towards this current high that we put in. So we're going to mark out this support level, okay, and as we always know, I always talk about this, we always say support, demand, so many different names. I'm probably just going to start calling it support. I do this every video, but I did want to say something about that. There's so many different names for all this shit, but if it works, it works. So who gives a fuck what you call it, right? If it works, it works. If it's, if it looks like a support flip resistance, who cares if it's a support flip to resistance or if there's demand in there from some type of heat map or all these different crazy things that people got going on. If the level works, it works. It's that simple. And I try not to overcomplicate it. So as the day opens, I'm looking and I'm saying, okay, well, look at this overnight session here. Resistance, 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 flips into, not necessarily flips into support right here, right? But you can see that inside of this consolidation is where people get positioned for this move up. So now this becomes our support / demand level, okay? What else are we marking out before the session starts? We're marking out a high, okay? Swing high. Let's mark out another high. Now let's get into the session, okay? We're going to exit the replay mode here. Take a sip of water, you know how I do. We're going to try not to focus on what's currently happening, okay? Like I said, I got my 4 wins in for the day. I'm very happy, very pleased to be back in the winners column, and I'm not trying to push my luck. I think that we had some amazingly clean moves in here that I'm about to teach you about. And now we're starting to see these candles start to doji up a little bit. And I think, my luck Not that it's luck, but for the expression, my luck may have run out. And at this point, I think it's time to wrap it up a little bit, for me at least. Okay, so very first thing, we look at the gray box, we open, what do? We run down straight into a demand level. Okay, this is the simplest, easiest layup trade you can get, okay? Here's the entry technique. We're just going to mark out this box, okay? Because this is the demand level right here, right? Because people always say, oh, well, what do you do on demand level? Do you buy the top? Do you buy the bottom? In my opinion, there's multiple ways to do it, right? But what we should look at is what we want to see hold is we want to see the top of the box hold, okay? So we want to see the top hold, right? A wick is okay, but we don't want to be closing down there. Look what happens when we close down there. We come back up, top of the box flips to resistance, we break down. Okay, so we do not want to see a close below the midpoint. Now what you can do is you can simply buy the top and put your stop below. Okay, so you could do this. You could buy the top of it. You could put your stop below. That's fine. And we'll talk about where the target is soon. Give me a second. All right. Or you can layer throughout the top of it, the top half. Okay, so you have one order here, you have one order here, you have one order here. Now you have a better average entry. Or you can take the greedy route and you could simply bid the center of it, right, with stop below. There you go. I personally bid the center. I wanted to be greedy on it today. Now, coming into this trade, unfortunately, I was still on my quarter risk because of my losing streak. This was my first win back. Now, does that upset me? No, it doesn't. You can hear it in my voice. It slightly does, but it doesn't, because the past 3 trades that I lost, I would have lost 3R. And instead of losing 3R, which stands for my risk amount, so let's pretend my risk amount is $100, I would have lost $300 in my last 3 trades, okay? But instead of losing 3R, I only lost 0.75R because I was only using 0.25R per trade, a quarter of my normal risk, as said in the tweet yesterday. Okay, so I actually only lost, and let's keep the pretend numbers going, $75 yesterday instead of $300. Now, I bid this with quarter risk, straight from the center, like I said, a little greedy. And let's talk about the target now. And here was my target. I got a pretty insane trade here, okay, 8R. But why? So when we're zoomed out, right? We're on the 15-minute time frame here. And we have a 15-minute demand level, and we have all this confluence in this level. I want to see something major ran, okay? So what I did was I longed this, and I'm targeting liquidity, our other major level from this morning, okay? Let's erase that for now. But when we started this video, which was only a couple minutes ago, but when we started this video, I told you I'm looking at 2 major levels to start the day. This swing high right here, it's not even really a swing high, it's more just a high. But this high and this demand level from this previous resistance, okay? We dig into there, we get to this liquidity, that's trade 1 complete. This is just a simple support and demand based trade, okay? Nothing complicated. Now we're going to move into a bit more complex strategy, okay? And this is stuff, give me a second, it's hot, man. Gotta wipe some sweat. So, this next one is going to be a bit more complicated, although I've taught you this one before, I believe, and then I'm going to show you a market structure break trade later. Okay, so first entry technique, simple support and resistance, the demand level. You retest the demand level. What do you target? You target liquidity. We're on a higher time frame here. Okay. Now let's start breaking it down. We have our other level that we were interested at the start of the day, correct? Liquidity level. We know how ES works. It loves to run liquidity. So when we get a sweep of liquidity, we're looking for an impulse down, and then we're looking for a retracement back into the prior support level that pushed us upwards. Now, you're going to say, oh, wow, you're breaking down to the 1 minute, you're breaking down into seconds charts. Here's the deal, guys. You can break down into that stuff because you have a high time frame level here. Okay, you have a higher time frame level here to work with. Now, we're not talking about high time frame in terms of like weekly or daily, but on an intraday basis, this is our high. This is our high essentially. Like I said, we also have a high here, But that's why we're not just blind shorting, okay? Here's the entry technique. We're going to go down to the 1 minute. We're going to watch the sweep occur. Okay, we see a sweep. Now, we can go down into even lower time frames, because what we need to do, and here's where we get a little disconnected, right? Because Bitcoin and Ethereum, they're not going to be this clean on seconds time frame, okay, like ES is. These type of trades, the previous trade, right, the support and resistance trade, this one, this is a simple ETH BTC trade. This type of stuff works all the time, okay? Very simple. Sometimes you will get this on ETH and BTC. You'll get like a little run below and a reclaim. You got to watch out for that, okay? But this is a trade that works on ETH and BTC, okay? And what I'm going to do now is put my links at the bottom as well. If you're interested in trading ES, please sign up with my link. That is how these videos will keep coming to you, and I'm going to keep teaching you how to trade it, okay? And then I'll put some Bitcoin and crypto links at the end in case you're interested in trading those, because, you know, as I said, this type of advanced content, in my opinion, you're not seeing a lot of this, and, you know, this is really just my scalping techniques that I haven't publicly shown really much at all until this year, because most of the time I was just doing higher time frame stuff for Twitter, because this stuff you can't really like make a call on Twitter. Like, we're gonna go down to some lower time frames here. I can't make these type of calls on Twitter and get people into these moves. It's just not possible. So anyway, we have our swing here, right? Or we have our high here. And we're just gonna keep breaking down as the high gets ran. We're on a 15-second now. And we can start to see something forming, right? What did I tell you guys? We're looking for the swing to be ran, and we're looking for an impulse down, and then we're looking for a retest of the support that led us up. Okay, I'm going to break it down even more. We're going to go down to a 10, right? This is getting a little crazy, right? But I'm telling you, you're going to see it. Look, impulse move. So we run the swing, okay? We run the high. We break down on impulse, okay? Now watch this. We retest the support level before the breakdown. Look at that. Support level before the breakdown to the pip. Oh, this is cherry picked. Okay, watch this. Ready? Yeah, now you're really gonna like it. Swing high, okay? Where's the impulse down over here? So we have swing high, we run the high, okay? Impulse down. Guess what? Look at this support before the impulse down. Boom. Okay? So look, we run the swing. We impulse down. Look at the support before the breakdown. Boom. Support before the breakdown. Boom. So there you go. It plays out 2 times perfectly in a row. It's a strategy that works very well. And okay, so simple as that. Where did I take profits on these? I hope I'm explaining these well. I understand we're breaking down to time frames you're probably not used to, but you have to understand is that when you're on a minute time frame, sometimes you're not going to necessarily see your entry point, because you would have been waiting. Let's talk about the first trade, right? The first trade, you would have been waiting for this impulse down, right? And look, you would have never retested the support level before the breakdown. So you have support, you have breakdown, but you don't get to retest this level. It doesn't come up to here. So you don't get the retest. So it's okay to be down with ES. It's okay to be down on these very low time frames as long as you have a reason to be. Okay? You have a reason to be because our levels are coming from a higher time frame. Here we're back on the 15-minute, okay? Our levels are coming from a higher time frame. Let's use the replay tool again. Let's back it up to here. Let's go down to the 30. This is our high. We get our first sweep. Let's replay it even more. Let's get like into here. Immediately when you see this swing, immediately when you see the run on liquidity, I want you to get down to low time frame, okay? I mean, you could be down on the 5-second for all you want. It's probably even cleaner there. Look, you run the swing, you put in a support level, you break down on impulse, right? You break down on impulse, guess what? The bottom of this swing level that we broke down through, there it is. Okay? And I actually entered a little prematurely because I didn't trust that it would go all the way up. I think I entered like on this right here. But nonetheless, you could see it taps perfectly. Okay? And then if we get out of replay, or we at least move forward a little bit. Let's see if we can move forward a little quicker. Okay, we do it again, right? We run the swing. Let's delete this high because it gets confusing when you're looking at both of them. It makes it more difficult for me to explain it. Okay, so now we run this high. We're looking for the same thing, guys. We're looking for the same thing. Let's break down to the 10-second. We run the high. We get an impulse down. Okay, now the impulse down. Where does the impulse down go through? It rips through the support, okay? Look. It rips through the support. Where does the impulse move down break through? It rips through the support. It retests this support, flip resistance. It retests this support, flip resistance. Okay? I don't want to beat a dead horse here. I'm trying to explain it as many times as I can in different ways so people can understand it, because I know this stuff can get a little difficult. Okay, so that is the same exact entry technique for both of those highs. Okay, and all of this started with the framework that we marked out before the day started. Okay, when you hear me say, or when you hear people say, I need to let PA develop, that's what it means. There's no way you could have gone into today and say, oh yeah, I'm gonna take that trade. You don't know if you're going to take trades in here because they haven't developed yet. They don't exist yet. Now, you could have said, I'm going to play this trade, right? You could have said, oh, yeah, I'm going to play this demand level. Boom, you get that demand level. You play it towards liquidity. Yes, you can play that ahead of time. And that's the type of stuff that works better on crypto as well. Now, keep in mind, these sweeps do work on BTC and ETH as well. I'm just saying don't go down to like the seconds time frame on BTC and ETH to take those type of trades. It's not going to make any sense. You're just going to see little dojis over and over again. Okay, do not go down to those type of time frames on BTC and ETH, in my opinion. Okay, maybe somebody knows how to make it work, but not for me. What you're going to see is when you see these type of sweeps on BTC and ETH, they're going to play out over a longer period of time, especially to get to your target. Could take, an hour, could take 2 hours. I mean, I've seen ones that have taken days. Okay, give me 1 second here. All right, so that's two of the entry techniques. We have just a simple support, resistance, demand type play on a retest. We have our swing plays, running liquidity plays, whatever you want to call them. I don't really have a name for them. They're just liquidity runs. And then you look for the impulse down and you short or you long on the support before the impulse down, or the resistance before the impulse up, right? If we want to show it, if we want to draw it in the other direction, let's say we got a high here, we do a swing here, we break down on impulse, there you go, short. And if you want to draw it the other way, you run the swing. Obviously these drawings are very shitty, but you know what I mean. We break through, this was your support, or I'm sorry, this was your resistance. My brain's getting funny with it. This is your resistance before you push through on an impulse. You retest it, flips to support, it goes. Okay, so that's the type of play. Oh yeah, I didn't show you guys targets for these. Okay, so let's just break down real quick. Target on these were pretty simple, right? And I'll explain why. Here's what you got to think, right? Coming into this session, I did not know if we were going for this swing high or if we were just going for these highs. So I was quick to take profits on these, on the swing moves down, on the liquidity moves down, okay? So let's see, here was our first one. It's obvious, guys. If you're in a short position from here, tell me, where's liquidity and where's demand? I know you guys see it. Well, we have an obvious demand level right here before the break upwards, right? So we have, look at this, consolidation, 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 big move up, big impulse move up, okay? So you could simply just take the top of this before the resistance, before the impulse up, and there you go. Or you could have taken profit below this liquidity level right here, okay? Either works. Same for this one. All I did for this one was aim to take profit below this liquidity level right here into this demand because it hadn't been used up yet. Look, this is still demand. Comes down, but then we just rip right through it. Why wouldn't I have long this? Well, the reason I didn't long this, I'm just trying to play devil's advocate to myself in terms of like, why would you long this demand but not this demand? Well, first off, this is a 15-minute demand with a lot of confluence before it, right? We've talked about this. Look at all the confluence on it. Resistance, 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 flips the demand, pushes us up, okay? That is a strong demand level that we're interested in. This, in my opinion, is nothing more than a taking profit level. It's a 1 minute demand. You have this wide area here of consolidation. So it was really just a level of taking profit, okay? Now let's move down to the final trade. All right, we're zooming back out. I decided I'm not going to show the market structure break trade because, in my opinion, it's actually not a great example, and I don't want to teach something that I realized that my execution, just looking back at it and I was about to explain in the video, I realized that my execution was actually incorrect, and I just got lucky, and I don't want to teach just me getting lucky. Okay, so while there was a trade here in just the liquidity play, like look, you have the liquidity here, and you go below the liquidity, you start closing inside of it. The problem was the market structure break was actually here rather than here, and I just didn't notice it, and I just FOMO'd into this candle. I wouldn't call it, looking in hindsight, I'm now calling it FOMOing because the market structure break was actually here, so I should have entered around here, and then I would have definitely, I don't know if I would have been stopped, but my target wasn't very high, right? Where would the target be on this? I think you guys can see it. It's going to be the resistance or the support before the breakdown, okay? And you don't get there quite exactly, but once it got close, I closed. You guys know how I do. When prices get close, I typically close. I'm more or less, you guys know how I trade crypto and whatnot. When profits are on the table, I more or less take them. I'm not concerned with the final 10%. I'm not concerned with the final 5%. I'm not concerned if I sell it 55K and it goes to 69K. Shit happens, right? But better to sell then, better to take profits than to watch the whole thing come round trip and reverse on you. So anyway, I'm gonna have to put a little cut in this video just to take that portion out. But yeah, really your market structure break was here, and then you would have had to wait for this close, and then that's where I got in. But I was thinking that the break was here, and my stop loss was just right below this impulse up right here because I figured we wouldn't be going back down after we market structure broke, and we did push up towards the take profit. But again, this is not really if you watched my previous video where I talk about market structure entries, this is not what I've been teaching. So I'm not going to show you guys something that was on my end. Actually, I just got a little bit lucky, and it went to target, but I didn't actually execute it how I was supposed to. So not going to show it. But anyway, yeah, you have a little liquidity sweep there. You reclaim the liquidity sweep. You do have a market structure break there, and it pushes up towards the previous support before the breakdown. Simple as that. Okay. Now, let's just talk real quick about. Well, we can recap real quick. We covered the resistances, flip to support, demand, push up, liquidity plays here, and liquidity play / lucky market structure break here. Okay, really simple as that. Let's talk about losing and winning and just the thought process and everything. So past 2 days, like I said, I think I was 1 for 5 or 1 for 6. I forget exactly what it is. Look, and you know, the reason I forget exactly what it is because these losses don't phase me, because I know that once my rules are that once I hit 3 losses in a row, and typically I'm trading with a positive risk reward, right? I told you guys this many times, you know this. I'm always looking for about 2 to 3 risk reward. So me losing 2 or 3 trades is essentially the same as me just winning 1, because I'm always typically aiming for 2 to 3 risk reward. That's why my rules have it set up to where if I lose 3 in a row, then I move down my risk. Okay, one sec. So hopefully that makes sense, right? 2 to 3 risk reward, always aiming for 2 to 3. If I lose 3 in a row, that means, you know, it means I'm probably out of sync, and it also means I'm going to start losing more than I'll be winning based off my system. So that's the time when I flip the script and go into defensive mode. Okay? Now, I don't completely exit the market because, you know, I think I said this in a tweet yesterday. You don't sharpen your sword by putting it on the shelf. You know, you gotta still be in the game and saying, hey, you know, are these things working? I wouldn't have known if my strategies were working again if I wasn't in the game. Okay? So let's say today opened, right? Let's say today opened and I got stopped out on this instead of getting, you know, the obvious bounce off demand here. This is a super clean trade in my opinion, literally a layup. It doesn't get any better than this, okay? If this just ripped right through here, I would have said, okay, well, this market is still not doing what I expect it to. It's still, you know, unfriendly. My strategies are not currently working in this market. Whatever you want to say, that's what I would have said. And I simply would have continued on my quarter risk. And I could have lost all 4 trades today, and that only would have been minus 1R. I only would, you know, going back to our pretend numbers from before, I only would have lost $100. And then eventually, once I get back into the groove, I start collecting, you know, 2R, 3R, got, you know, that crazy trade today with 8R. The rest of them were only like, I think, somewhere between 1.5s and 3s. They weren't anything special. This one especially was something very small. It was like a 1.2. These were like 1.5s or 2s, and this one was the only one that was really good. And unfortunately, this one was the one that was on quarter risk. But hey, that's a part of my system, right? You don't have to play by my rules or my system. I'm a thorough believer that everyone needs to develop their own system and how, based on how their brain works. I'm a low risk taker, okay? I think a lot of people have learned that by now. You know, I didn't fuck with the NFTs. I didn't fuck with yield. I told everyone, get your money at all these weird ass yield platforms and chains are gonna break. And, you know, I said all that. You know, it's all documented on my feed. I said all that shit. That's why I'm not involved with any of it. I play a very favorable risk reward to myself. I don't put myself in danger. I know I have time, right? I have time ahead, and I'm not in some crazy rush to be capturing 20R a day on insane amounts of risk. I understand some people, you know, you want your Lamborghini tomorrow. I get it. But to me, it's not that important. And I know that it will come one day, as long as I continue to stay within, you know, my system, my rules, using my strategies, continue to refine my strategies every day, and that's really the best I can do. Okay, so if you're an amateur or you're a beginner and you're here and you need help, and you know you're saying, oh, I'm on a losing streak, I've lost 6 in a row, I've lost 5 in a row, shit, maybe you've lost 10 in a row, it's happened to me before. Just reduce risk or paper trade for a little bit. If you really feel like you have no grasp on the market and you have no strategies, okay, hopefully this video has taught you at least 2 strategies, right? I think the demand supply one is very good, and I think the liquidity runs are very good strategies as well. As said, in crypto, they just work a little bit slower, okay? They're often slower. You know, we can look at ETH real quick. I think I already had one marked out. So, yeah, the demand level here, right? And I'm not going to go through the whole chart, but You had a demand level here that sent us up, right, to take this liquidity. So in my opinion, this was a significant level. And then look what you had here. You had equal lows, low, low. You tap the liquidity, you move up. Let's see if there was anything on the lower time frame that would have got us in. Okay, so you sweep the sweep, you impulse up. Okay, when you impulsed up, what was the resistance before we impulsed up? This resistance right here. Okay, we come back down, we retest it, and what would we do? How would we trade this? Well, we would put stop below, right? So we would long, stop would be below the low. Okay, stop below the low, and we test it again, we test it again, stop is still safe, okay? But look, like I said, and I didn't even look at this ahead of time or anything, but look, so in crypto, you would have been down here for 4 hours. I mean, you would have saw some profit here, but if you wanted the meat of the move, and where would we have targeted? In my opinion, we would have just targeted like liquidity right here. So you would have entered here, and it would have been a 4.5 hour trade. Okay, so now you're starting to understand how this can relate into crypto. It's going to take a little bit longer, but the trades are still there. Okay, demand level, liquidity, sweeps the liquidity into demand, and it rallies right into the liquidity level here. Look, breaches it, gets back below. This was a good take profit. Okay, so that's how they can relate into crypto markets. So we taught that one. We taught the liquidity ones. And yeah, hopefully the whole, losing streak thing back into now a winning streak is helpful to you guys. And you can see how it's okay to take a couple of losses and you can turn it around. Just don't blow out your account over losses. If the market is not being friendly, if it's not, now, some of you guys are going to be new, and you're not going to have these strategies marked out into, what the win rate percentage should be. But I mean, I've been doing, these LTF scalps for a while, and I know around what the win rate should be. And when I see the win rate at, 10% on the week or 15% on the week or something, I know that it's wrong. And I know I'm not saying the market's wrong, but I'm saying what I'm typically doing and what is typically working for me is not working. So something has changed in the market, and I need to lower my risk. I'll lower it to a fourth. I'll lower it to a sixth. I don't care how much I need to lower it, but I'm going to keep trading. I'm going to, as my pin post says, I'm going to reduce size. I'm going to keep trading. I'm going to keep practicing. I'm going to keep improving. And that's how I'm going to get back into a rhythm and get a bunch of wins that made up for my losing streak. Just like I did today. Okay, so hopefully this video was very helpful for everyone. Please go back, like, and retweet the tweet. Links are at the bottom. If you want to trade ES, you can trade on Prime. Got the links at the bottom. If you want to trade crypto, you can trade on my Bybit links at the bottom. Okay, thank you very much, everybody, and have a great week.